Hey everyone, welcome back to another episode of AWM Insights. Appreciate you taking the time to listen in today. We're gonna try a slightly different format today, mixing it up a little bit. We'll keep experimenting here and trying new things with the hope that some things resonate for you all. But we're gonna do kind of a quick fire round Q&A. Just go back and forth. What's going on in markets? What are we seeing? What's our quick take, etc. So. Without further ado, let's jump right into it. Mena, what's the biggest market highlight this week?
All right, some recency bias, but I think Figma's IPO is the big one. Figma today was up 250%. It IPO'd today on its first trading day, partial trading day, I should say. It's up 250%. In the after hours, it's up another 25%. And at that scale, in totality, it's up 340% since IPO, which is wild.
Totally, man. Yeah, which gives me some pause, like some excitement, because it's great to see IPOs coming back to the market after, a couple years of very slow activity. But it's also a crazy valuation, which makes you scratch your head a little bit. But happy to see it at least today.
Happy to see it. Yeah, we have some exposure in that, so it's a win. But yeah, pretty crazy times.
Totally. All right. Financial headline our listeners cannot miss.
I think there's been a lot, especially on the podcast side, just a lot of news around players that are either being scammed or going broke and just making bad financial decisions in general. Lou Williams has spoken about it, the NBA player, a lot. And I think it just goes back to being a pro when it comes to your investing. And also, you say it at the end of every podcast, owning your wealth. There's owning your wealth when it comes to actually saving money and not overspending and buying crazy things. And there's also owning your wealth when it comes to making the right financial decisions with your earned income and your saved income and investing it properly. So just avoiding that, I think, is it's been in the headlines, and we obviously don't want any of our clients to get there. So we make good financial decisions here and invest properly, but hopefully that bleeds into all ventures of sports.
Yeah, 100%. I mean, so much of this comes down to discipline, and that's just an easy word to say, but it's really hard to implement when you're talking about a short earning window and then money that should last for generations, right? Those are hard hard aspects, hard facts to balance, if you will.
Yeah, the earning windows is so hard. We're going to work for 40, 50 years. Some
Fortunately
players,
or unfortunately, yeah.
Yeah, some players are not going to get a tenth of that. So have to think about that. All right. Can you break down crypto in 60 seconds?
Oh, man. I can't do
Loaded
anything in 60 seconds, but this one's hard. I mean, well, first of all, the term crypto is a very broad, is a term that covers a very broad set of assets. But specifically, getting a little technical here is crypto basically encompasses anything that uses blockchain or cryptography, which blockchain is, technology to represent an asset effectively, or can represent anything. I shouldn't say represent an asset. To record keep something. That could be a token like Bitcoin. That could be actually a physical asset that is tokenized, if you will. So that's the quick and dirty definition of it, right? Cryptography to document via a ledger ownership.
That's it?
That's it.
Yeah.
I don't know if that was 60 seconds.
No,
that's it.
There's a lot of good use cases too. We look at just financial services and how it takes multiple days to send money around via the traditional banking system. Crypto could upend that, but obviously a lot of different avenues to go and a lot of technologies around that actually support cryptocurrencies in general. Cool. What's one financial myth you're hearing and the reality?
Yeah. One thing that's been popping up in my mind a lot recently, I shouldn't say a lot recently, just over the last couple of years, is is the experience of relatively new investors. This is both through conversations I've had, but also just kind of paying attention to the media, and that is the current market. I would say as well that markets really kind of go up and to the right, and that's all they do. I'm I guess fortunate, if you want to call it. I can say that now at this point in my career. I started my career through the great financial crisis, and that was certainly not up and to the right. And I've been through quite a few downturns for a variety of reasons, whether it be even the pandemic. We can say a lot of new investors lived through that, but that was so short in duration. And I mean, it was intense, but it was so short that I don't think a lot of investors today appreciate the market dynamics enough. And that's not to the listeners here. I think this is a broad-based commentary around market participants. And you kind of see that both in the bad parts of crypto. To your point, there's very good parts of crypto, and we've talked about that. You see that in meme stocks, right? These people are just like, they're playing games, right? It's turning investing into gambling in a sense, and not to say that hasn't happened in the past. It certainly has, but there's a lot of I guess similar activity and behavior if you study the history of markets that we've seen in the past that generally speaking doesn't end well. And that's certainly if you want to call that a myth, it's kind of a trend activity behavior I'm observing, and I believe truly that those are bad behaviors.
Yeah, no, I agree. What's an economic data point that surprised you recently?
GDP. So GDP, it's basically the scoreboard of our economy, or any economy, if you want to call it that, right? The U.S. GDP is our scoreboard. The global economy, global GDP is what's going on around the world. We just got our number for the second quarter. And, on the surface, you could say it was surprising. It was 3%, I believe, on an annualized basis. But why it's surprising, and this is kind of I guess, leading question that you asked, is that the first quarter was actually really, really, really weak. So things are bouncing around quite a bit because of what's going on with tariffs. Exports and imports are part of GDP, and they're really skewing those numbers. And so you got to remember, you can't just look at the headline data. We're in such a attention starved world that sound bites and headlines are often all people pay attention to, but you see something like that and you're like, oh, interesting, great, we're growing really well. And actually, in reality, we're not. We're seeing slower growth. So that's one thing that both surprised me this week, but also just a great reminder, hey, the devil's in the details. All right, we're going to wrap it up here with a couple more questions. What's your single best tip for clients this week?
Well, with all the craziness going on, IPOs that are up 340% in a day, and just all the speculation around cryptocurrencies, I would just say run the playbook. Trust the playbook, run the playbook. Don't really deviate from it, because as you were saying around the speculation piece and just people gambling with their actual savings and with money that they need, it typically doesn't end well. We have been living in a period of time where everything has been up and to the right. So not a lot of investors know what it actually feels like to get punched in the teeth. So yeah, running the playbook avoids that. It also increases your probability of success over the long term. And yeah, I would avoid a lot of the speculation, especially right now, given the media hype, and typically what happens when assets get overhyped. So.
Yeah, 100%. And also, right, we are exposed to some of the hype, but in a disciplined, well thought out way to really take advantage of it and not get overextended or go chasing returns, right? There's a process that is set up ahead of time to make sure we are getting some exposure to all types of markets, including those that are going through some hype cycles to an extent.
Awesome. And then last question, are you bullish or bearish on crypto? I know that is a loaded question.
That is a very loaded question, but I'll answer it. It depends, given the good old kind of professorial answer. But what I mean by that is it depends on what part of crypto you're talking about. If it's the part where, people are issuing or creating new coins or tokens and just trying to pump them and turn those into memes as well and pump and dump type schemes? Like, absolutely not. It's a negative of the broader blockchain technology that I kind of tried to define, probably not super well earlier, but I am bullish on the technology side of it. We really like the picks and shovels approach, which we talked about. I think that was last week, and we've had some decent outcomes in that part of the crypto world. So I would say, in general, bullish on the technology, the way it's being used and whatnot. It is the Wild West. So it's kind of expected, but you also, going back to the comment, the question I just asked you around a hype, you have to tread cautiously is I guess how I would phrase it. But overall bullish.
Awesome.
Cool. So we'll wrap here. We talked a lot about some opinions we have. And one thing we challenge ourselves on quite a bit is it's actually really good to have an opinion, pay attention to markets, but we also need to know the difference between our opinion and whether it's an emotional reaction to the present day, or is it something that's backed up by data and something we should act on in a very fundamental, disciplined, wise way. And so a lot of what we talked about, I think, potentially could go either of those two ways today, but it's just a good reminder for all of you listeners that just because someone has an opinion or we're talking about something, a hot take here or there, it could just be that, a hot take, and you actually shouldn't act on it. So with that, I'll wrap with our closeout here. Own your wealth, make an impact, always be a pro, and thanks as always for listening.